Hi there, traders. This is Brad Gilbert with the FX Market Insight for Tuesday, the 3rd of March. All right, now just leading into the market, I'm just starting on the risk on, risk off sort of template here. It's the main one. This is where all the energy has been. Now, US equities bounced, say, 5% yesterday, the Dow Jones. Now, that to me is just a correction. It's not like everything's finished. What you'll find is when the markets start to discombobulate and fear gets across the markets, especially in the equity markets, you'll start to see huge volatility, right? So don't think this is over by any stretch, but it's a pretty calming influence. Now, if you look at the Asian equities, which will be running straight off the back of the US equities, you can see they're sort of taking it as a positive, but it's once again, it's a slight correction. This thing isn't over. The topics there up 2%. The Nikkei up 1.7. So don't get overly excited just yet, but just understand the whole risk on, risk off profile, or the risk off has been corrected somewhat. Keep an eye on the yen and yen crosses here in particular. You can see there's only a slight bit of movement at this stage. We do now need, this is where these geopolitical events sort of tumble into each other. We now need updates. Is this worse? Is this better? Is it just a whole heap of crap? Et cetera, et cetera. So that's what we're sort of waiting to hear. And unfortunately, unlike the fundamental data that we sort of look and trade around, that we know what the central bank's going to do based off those numbers, this is all random releases, random reports. Which news article do you believe? Which ones do you don't? Et cetera, et cetera. So just bear in mind even gold's up a little bit there today. So the whole focus for me hasn't really changed too much. If you're looking at the pairs that are moving with the equity markets, Aussie and Kiwi in particular, and obviously the yen crosses there as well. So dollar yen, funnily enough, is well off the radar. If I can just clear that, just look at dollar yen at the top. It's not correlating with any of the it's actually correlating obviously with the Nikkei, which we'd expected, but the US equities, it is not correlating now, right? So this risk on, risk off profile that we've been seeing, especially hitting the yen as a safe haven, it's just died in the backside for the moment. All right, so that's what we've got to deal with, right? So this is by a long stretch, a long way from normal market trading conditions. Now, let me just come back. This is where major panic that we've seen in the equity markets come into play. You're looking at economic numbers, all right? So the building approvals, now this is a probably second or third tier number at best. I know Reuters have got it up here as a high impacting number, minus 15.3%. That's a bit of a sign that consumer confidence, et cetera, is pretty crap. So, but what are we seeing in the currencies? Right, if I just come back, bring you back across to the major pairs, you'll start to see that none of this makes sense at all, right? You think the Aussie with those sort of numbers in normal conditions should come off a bit, but what we're seeing is no impact, right? That is a concern to us, especially as we come in today where we do potentially expect the RBA to, maybe cut rates. It's going to be pretty loose because the fundamentals have been pushed aside by the panic, right? Once the panic sets in, fundamentals drift off. The central bank's got a hell of a job to try and control, consumer sentiment and, just trying to keep things calm in their own economies, let alone trying to work out what they should be doing with interest rates. But just have a look at the other major currency pairs here. We saw a bit of a dive down here in the Kiwi yesterday, straight back up into the range. Now, to me, the Aussie and Kiwi are still two of the main pairs that are active. That means they have clear downside momentum, and the central banks are running with that. Dollar yen, well, we've seen once again the panic set in. You see that drop down under 108. Now we're sort of sitting around here, drifting sideways. I still think you've got to be selling dollar yen on rallies, but right now we're looking at the equity markets for direction, and they are bouncing. Dollar yen isn't bouncing, but it takes the pressure off the downside for the moment. And for those punters like me who I always look forward to selling euro, but it's sort of like it's on a different planet, right? Sort of like what Sterling was doing around Brexit. There seems to be less interest in the coronavirus and all this sort of stuff in Europe and in mainland Europe, Germany, probably isolate them as being, well, you know what? we're out of this. It doesn't include us. And so just because the dollar's come off, Euro has gone up and felt the benefit of that. Now, that's not going to help the Eurozone. They need a weaker Euro in itself. But what we're looking for is trading opportunities. Do I sell Euro yet? Well, probably not just yet. It doesn't look like it's quite done, even though we are at pretty good levels. Sterling dipped under 128.46. You can see how it's sort of just making a bit of a base down here. It's caught up between the coronavirus situation and also, the stumbling UK politicians who are trying to get some sort of deal going with the EU. Doesn't seem to be working at this stage. And as you can see here too, the price action on dollar CAD, pretty loose, right? We had a bit of short-term support line. It's hacked through that. And then we've got the previous resistance line acting as support. That's the only thing sort of holding it up. To me, this is pretty loose. And you've got oil bouncing back to $48. Now, what is this? What do these charts tell me? Well, you know what? I'm really focusing on the pairs that make a lot of sense to me. All right. Now, if I just bring you back over to the MyFX Trading Hub. Now, just looking at the overall conditions, this is where you've got to piece out your trading for the day. Now, understand, trading conditions right now are pretty poor. And what we mean by that is there's no, like some of these pairs have clear direction, but the actual price action and where momentum is coming from is random, right? If you can't isolate that, it's a pretty tricky situation to be trading because you just don't know where to sell, when not to, et cetera, et cetera. Market drivers, well, the UK-EU trade talks will continue, but the old pandemic is getting plenty of airtime. Now, the media, governments, everyone's taking advantage of this for their own benefit. I think the general public will wake up to themselves pretty shortly and work out this is a bit of a hoax. And I don't mean a hoax in the sense that it's not real, but, the extreme part of it, it just seems to be, it just doesn't make sense, especially when we've had things like the common cold doing a lot more damage. Now, active pairs. For me, I'm focusing on the main pairs for me, Aussie, Kiwi, Aussie Yen, and Euro Aussie. Now, these are the pairs to me which have very clear direction, short-term and long-term. Some of the pairs we have support and resistance. Today, we have the RBA interest rate announcement. That is the main driver and catalyst for the next move. Now, the hard part about that is going to be trying to work out how the impact is, because has the market factored it in? It looks like a little bit, but it's pretty hard to work out where it's going from there. Now, on my watch list, sits a bunch of other pairs. We've got some pairs with a bit of short-term direction, but no real clear direction in my eyes, and that's why they're on the watch list. I'll be keeping an eye on them. The pairs that do have, market drivers or fundamental drivers coming out, well, there could be a short-term trading opportunity there, and I'll be focusing on those around those events only. Now, with those market drivers, as I said, the key one is the RBA. And from everything I've read, the market is expecting some sort of or potential rate cut from the RBA. You know what? Those manufacturing numbers over the weekend and Monday were terrible in China. If they were to continue, that would mean a massive slowdown for Australian exports to China, and that's going to create unemployment, et cetera, et cetera. So to me, it would be a smart call for them to cut by 0.25, right? I know it's early days and this, so-called pandemic may be massive, but it's easier to cut rates now, get the confidence back in the market, and then raise them if they need to. So we'll see how that plays out. I'm expecting a surprise rate cut. We'll see how that comes out. It's in a few hours. Then you come through the Eurozone. We've got a bit of data to mull over, right? So and this is good because the euro is at elevated levels where it probably otherwise wouldn't be without all these other things going on. The Swiss GDP, well, you don't usually get much variance in that. And with that, saying that, if there is, it will sort of move around a bit, but it's moving to the downside very nicely. Dollar Swiss, strong GDP numbers supports that move. Then you come into, you're looking at the Eurozone itself, Spanish unemployment. I can tell you this might start to come in to play again with all the panic across the globe. Spain was a sore point for the Eurozone a few years back, and it could come into play very quickly. Keep an eye on the CPI flash estimate and the unemployment rate out of the Eurozone there as well. Construction PMI in the UK, I don't know if that's going to really come into play, but it is coming out. Now, so normal market conditions, I'll be pretty pumped, as I said, for especially the Eurozone and the RBA announcement. But with conditions the way they are, you've really got to sort of, hold back your capital, because some of the moves are just not lining up with what should be happening, right? And when that's the case, you know what? Just let the market, if it doesn't make sense to you, right? Well, let the market determine what you're going to do. But if things don't make sense, okay, bouncing 5%, equities, yeah, they're up. These pairs aren't going up, which tells me something's out of whack. Gold's up a little bit, and you look at the pairs that are correlating with the equity markets. Well, it's time to just relax, wait for the opportunity. There's going to be better trading conditions. For me, the key part will be focusing on the Aussie and Aussie yen. As I said, the RBA announcement is coming up. To me, this is a situation where, if everything was fair and equal, as I said, no geopolitical events, we could have a cracking opportunity here to get into the Aussie. I just can't for the life of me work out, and I've been reading a bit about this, how much of the surprise rate cut is factored in. It's very hard to call at this stage. If you come down to the central bank sentiment on our site, just went past it. The key parts for me, they're looking at that they have sort of highlighted that international global events would be important. But what they are looking for is, the labour market, okay, growth in the economy, full employment, and achievement of the inflation target, which the inflation target's 2 to 3%. We're not far off that. Okay, so without the coronavirus, they don't do anything. With it, do they do something or not? I don't know. To me, I'm going with a surprise rate cut. The impact of that, okay, I think we should see the Aussie lower. That makes sense. I'll be looking at the price action after the release if they do cut. If there is no rate cut and it's been partly factored in, well, you know what? We're going to see a surprise pop to the top side. All right, guys. It's going to be a bit of a tricky one, but let's just play it out as it goes. Those traders that have access to the Teams app will keep you in touch on there. All right, guys, have a good one. It's going to be a very interesting day as we run through the announcements. As I said, you got about 2 hours before the RBA, and we'll see how that plays out from there. All right, guys, have a good one. Cheerio.